So why don't we go into it in that regard? Because we're seeing a lot of things that are being posted in the media, being talked about. And one of those things is this whole idea of forbearance versus forgiveness. Or some people are thinking mortgage forbearance as forgiveness, as in they don't need to pay it back. It's some free money, or you don't need to pay your mortgages, and then it's free for the past 3 months because of the coronavirus. But tell us a little more about what's going on there.
Yeah, so if Will, you could still hear me? Okay, perfect. So with forbearance, definitely a lot of different people right now, and especially the way they've been talking about it in the media, a lot of people are under the impression that forbearance means forgiveness, but basically it's a provision within the CARES Act that was passed within the government. And bottom line for the forbearance, if you are going through any financial distress, losing your job, and you can't make your mortgage payment, then you have the option of being in a forbearance program where 6 months you cannot make your mortgage payment and basically not be penalized, not have your credit score hit, etc. And so it's a great option, of course, for families who are in that position and really can't make their payments. But yeah, just a friendly reminder to everybody that it's not forgiveness, meaning that you do eventually have to pay that money back. And fortunately, one update that we saw in the past week, in the past, when it was initially announced, a lot of people weren't too sure about how exactly the repayment would be, I guess, laid out and organized. But with the FHFA, so anyone who has a conventional Fannie Mae Freddie Mac loan, they did announce that they're not going to require a lump sum repayment, which would mean after a 6-month period,
That's
6 months
huge.
of your mortgage payments. Yeah, no, definitely. And so especially if you weren't sure about that happening at the end of your forbearance term, realistically, for a family going through a tough time, they couldn't make those payments, there's no way you can pay back a lump sum. And so this is actually really good news that they were able to confirm that information. And so with the forbearance, just a recommendation as a whole is if you can make your mortgage payments, definitely make them. And if you really cannot, then this is an amazing option where your credit score is not going to be hurt, but just know you are going to have to repay back whatever you don't pay.
So there's a couple questions there. One, do you need to apply for it? And two, what does that payment look like? If it's not a lump sum after the end of 6 months, which is phenomenal, because unless you have it all reserved and saved up for you to be able to do that, it'd be very dire for you to be able to pay that all back. But so yeah, where do you apply for it? And then also, what's a payment or payback look like for those?
So it depends on the company, but bottom line, right now, you actually don't have to show proof of financial distress. And so all you have to do is call your servicing company. And so this part, I kind of wanted to go back to what happens to your mortgage after it funds and closes, because there's a few different entities to keep in mind. You may, for example, come to me and my company and we close on a purchase and a mortgage at my company. And so some companies have a servicing and a non-servicing part of the company, but some companies will just transfer the servicing rights too. But I guess long story short, bottom line, the servicing company, which are the people who are collecting the payments from you, that company may be the same company you went to when you got the loan, or it may be a different company. But your payments, everything, none of your terms are changing. It's just where you're paying the money is changing, and that's the servicing company. And so going back to the forbearance, if you do want to request to be in a forbearance for the CARES Act, then you have to call the number on your mortgage statement, because that's going to be your servicer. And if you call them and let them know of your intentions, what you want to do, then they should be able to get you into the forbearance. And now as far as the repayment goes, that's where we're not too sure exactly how it's going to be set up, and it's going to depend on the company. And so talk with that company specifically about your repayment terms or the possibilities that might come about. Because what a few different companies might be doing currently is, for example, setting up a repayment term of 2 to 5 years, and they'll just amortize however many months you missed. And then on top of that minimum mortgage payment, you're making an additional payment for the months you missed. Or they might tack it on at the end of the loan. And so at the very total of the loan, they'll just add it on there. But then if that were to happen, it could be considered a loan modification too. And so the reason why I don't recommend for everybody just to jump into forbearance if they have the ability to pay it is because how the repayment goes will determine if, for example, it gets categorized as a loan modification. That's going to show up on your credit eventually, and it may impact your ability to get a refinance or get a purchase later on in the future. And so those are the different details I would just kind of keep an eye on and talk with the servicing company about.